They want to be like the Amazon of luxury stuff. What's going on YouTube? Taylor Prentice back here with another video. And in this video I'm going to be talking about a stock that I'm buying here today that is down 70%. And that stock is Farfetch. So if you guys are unfamiliar with Farfetch, it's pretty much just a company that is a retailer for luxury brands, whether it be mostly fashion is what they do, but they also do like some home decor and fragrances and stuff along those lines. But pretty much any luxury item you can kind of get through Farfetch. So that's really what they're chasing, is to establish themselves as like the best online place to buy luxury items. They want to be like the Amazon of luxury stuff. So I want to give you guys like a rundown on why I think the price has become pretty appealing, as it's dropped 70% over the last year. And I actually have a video like a couple months ago talking about how I thought it was overpriced when it was like $50-$60, but it's down at like $12.50 here today when I'm filming this video. So it's definitely starting to look like a pretty appealing purchase. I've actually been picking up some shares these last couple of days. And yeah, so I just want to give my bullish case on this stock for the next couple of years. But with that being said, make sure to do your own research. Don't listen to just what I'm saying. Make sure to go listen to other YouTubers, read their earnings reports, listen to their most recent conference calls. This is all stuff you need to be doing when you're an individual stock picker. You need to have high conviction when you buy into companies, because you really just need to know where you're putting your money. Otherwise, it's probably better that you just invest in a broad index fund, which I honestly don't think is the move right now. I think there's a lot of good money to be made in individual stocks, but like I said, you need to do your due diligence and put in the hard work. So for the first time in 2021, Farfetch reached a break even when it came to their adjusted EBITDA, which is really, really good. I actually expected them to still be negative, and I wouldn't be surprised if next year they're not like super in the green, but it looks like they are predicting that they will do better than they did this year. So that is very interesting to see, and it'll be interesting to see how they do in the first couple quarters of this year. Typically they do better on this like last two quarters of the year. It's just better for fashion. Nordstrom is kind of similar, but in the last two quarters they've actually missed on their revenues just by a little bit, but still not something you want to see from a super high growth company, even though their earnings per share, they like completely killed it the last two quarters. So take that however you may. Here's an interesting bullet point from a Seeking Alpha article that I'll have linked in the bio or the description of this video, whatever. It says, despite being at a massive scale, Farfetch continues to demonstrate resilient, greater than 20% year-over-year growth, indicating the largest of its market. Farfetch pegs the global luxury industry at $300 billion annual size, 1/3 of which lies in China. In the recent conference call, they said that they're really aiming to grow in China and obviously the US, but the US is already their biggest market and where they've seen the most growth. So I think China is the next place as far as luxury items go, because I feel like it's just part of the Chinese culture to be into luxury stuff. So I think Farfetch will do really well trying to grow there. And to finish up the last bullet, Farfetch is currently doing north of $1 billion per quarter in GMV, which is gross merchandise value. They actually don't project their revenues for the next year, which is kind of weird, but meaning that it still has about 99% of the market left to conquer. So pretty much what they're saying is there's a lot of TAM, or total addressable market, for Farfetch still to acquire. And even though in my eyes, like when I think of places that sell luxury items, they're definitely like one of the first people I think of. Like them and Saks are probably 1 and 2. In my eyes, it's definitely a thing, but a lot of people in America, I feel like, still don't know Farfetch. It's a UK brand, so I think it is a little bigger in Europe, just a little more familiar. But I actually heard about Farfetch a couple years ago. I've bought some things from them, but obviously I'm not like the main guy who's buying stuff from Farfetch, because I don't have money like that. That actually leads me to one of the risks, I think, for Farfetch, and that is people, like when they're buying really high ticket price items or really high luxury items, they want to make sure that they can wear them and stuff. So I think that's a downfall of Farfetch being an e-commerce website. But from my history with Farfetch, it seems like they're pretty good about returns and they have really fast shipping. So it seems like if you were to have like a sizing issue or anything, it could get taken care of pretty quickly. The only time that becomes an issue is like when they're doing their sales for customers. I mean, because say I'm a customer and like all the sizes are sold out and I buy a size 30 pair of jeans and they don't fit, I really need like a 32, then I'm kind of SOL when it comes to that, but that's like very rare occasions. And actually, in the same Seeking Alpha article, it said that Farfetch is becoming less dependent on sales and stuff. So I think that is a really good positive for the brand, because I'm one of those people that like kind of only goes to like these really high end retailers when I am looking for sales, because it's hard for me to just spend that much money on clothes when I don't have money like that. And like, I'm not their biggest customer. Like I said earlier, I'm probably only buying like 1 or 2 pieces a year, so I'm not the person they're really worried about. But it is good as an investor to see that they're not relying so heavily on sales and like promotional things to get sales, if that makes sense. Another thing that really excites me about Farfetch is how they're expanding their businesses. So obviously they've kind of established themselves as like the luxury fashion people, but they're actually getting into beauty, so like skincare, and I'm actually like whatever goes into women's beauty type of stuff, which is a huge market, and I think they'll do very well for themselves. I think they're gonna develop some of their own products, as well as taking the traditional route that they have and selling like really high-end companies alongside them. I'm not really sure what any of those brands are for like women's beauty care, but I'm sure those brands will be brought in, so you'll have like Kim Kardashian stuff next to Farfetch's stuff, which just makes Farfetch's stuff looks better. And it'll be interesting to see like how they price those items. That should be really interesting to see. And they're also starting to sell kids lines for clothes, so like Off-White has never really had like a kids line. They announced that they will be doing that, so it'll be interesting to see if opening up like the kids market has too big of an effect. I'm one of those people that thinks it's really stupid to buy designer clothes for kids, because they don't know what they're wearing and it's just going to get messed up and they're going to grow out of it. So it'll be interesting to see how those affect the numbers, but to be honest, I don't think it'll have a huge effect, but who knows? Farfetch has said that they've struggled due to COVID and just higher costs like shipping and just packaging and stuff like that. But as we see those prices kind of decline over 2022, I think that'll allow them to kind of boost their profits, because I know in the past when I bought from them, they use like DHL, which is like almost the most expensive kind of shipping. So I know the customer kind of definitely pays for that in the end. So it'll be interesting to see if they kind of keep passing those costs on to the customers even when their costs drop. I think that's what they'll do personally, because their customers aren't really the type of people to care about shipping. I wouldn't think. Like, if you're gonna buy like $1,000 pair of jeans, like what is $20 or $25 shipping? It's like, it doesn't really matter at that point. So you got to keep that in mind. They have a very different clientele than most of these businesses. Even like a Nordstrom, the Nordstrom clientele is very different from a Farfetch clientele. They might have like some crossover, like someone like me, who can usually typically afford stuff at Nordstrom, but can't really always afford the stuff at Farfetch, but I'm interested in it. So there is some crossover, but like I said, it really is just 2 different levels of money when it comes to shopping at these places. Farfetch is also able to get some very limited collections and a lot of stuff that other companies might not be able to get on their website. So I'm going to go ahead and kind of wrap this up, but I wanted to give you guys some reasons why I'm bullish on Farfetch, even though I wasn't just a couple months ago, or at least thought it was overvalued. I've kind of always been bullish. I've thought that the company will do well ever since I've started following them, because there's no one really in that class besides like a Saks, which I still don't think Saks is quite near on the same level. I feel like Farfetch has a lot more options and just carries a lot more brands, which is kind of like what you want and what they're going for. And they've tried to kind of model themselves after Amazon, so they're getting all these distribution centers set up, and they've kind of already established that, is what they made it seem like in the conference call. And he said that was the hard part, and now that they have that established, they're kind of moving on to capitalizing on that and taking advantage of being able to ship multiple products in one time to save on costs when it comes to stuff like that, and just being able to get their items to customers more quickly. So I think it'll be interesting to see them kind of try to establish themselves as the luxury Amazon, and I think they're going to be able to do it because it doesn't really seem like they have that much competitors. Obviously, you've got like Saks, I would say, is probably the most legitimate comparison to them. And Saks is, like I said earlier, they just don't have near as many products, and they're not so heavy into e-commerce. Obviously there's still some Saks around, like physical stores. It's kind of a dying thing. That's like one thing that's good about Farfetch, is they don't have all those costs of having physical stores. But one thing that's bad about that is they also don't have any real estate to sell off if they ever get into a pinch or really need money. Like Nordstrom has a couple of locations that are just really, really expensive, to where if they ever really needed capital, they could just sell it off. This actually happened a couple years ago. And I'm a Nordstrom holder too. I should have mentioned this earlier. I also hold Farfetch, or I think I did. I said I was buying a couple shares here lately. I don't have a huge position in it, but I've always kind of comped it against Nordstrom, even though they're a little bit different business models in class. I've always felt like, just since they're the two main fashion stocks, it feels like to me, those are the ones that I've always been interested in. And I'm consumers of both of their sites, or retail sites, whatever. So it's kind of easy for me to stay up to date on what they're doing and how they're doing. They'll both be companies that I continue to follow. I think both of them are undervalued right now. I think retail stocks in general are just kind of undervalued right now because of the Rona, and just with all the Ukraine-Russia stuff going on. I feel like those stocks were like the first ones to get hit from just any conflict or any fear in the market, because they're just not as stable as like your big techs or whatever, which I own Meta too. Hasn't been real stable. But yeah, that's pretty much it for this video. I hope you guys kind of understand why I have a bullish outlook for it, and I'm not gonna be greedy. If it gets back to like 60 a share, like I will probably sell some of the shares I bought. I think realistically, like $35 is somewhere where the stock could end up by the end of the year. Anything above that, I think, is a little rich, and anything below that, I think, is a little cheap. Like $12.50 is definitely cheap. I would be amazed if it didn't get back to 20. It actually bounced back to 20, it like dropped down to like 15 one day last week, and then popped right back up to 20 the next day. So it's been at 12 or like 12, 13 for a couple of days. So it'll be interesting to see how it plays out, and if it shoots right back up to 20 anytime soon. I'm kind of hoping it doesn't right away. I'm hoping to acquire more shares. I'm actually running really low on cash because I've been buying really heavy. Stuff like Meta has gotten really appealing. It's at like a 14.5 PE ratio, which is just insane for a company that's that big and has that much growth. So I'm spreading thin on cash right now, but I'm really, I have a really positive outlook for 2022, even though it might be kind of a slow moving year. I think by the time 2023 rolls around, I think these companies will do really well, especially the smaller retail stocks, like the smaller cap ones. I think Nordstrom will be at $40 in not too long. It actually had just had a crazy recovery day where it went up like 20% in a day or something like that. I think that's just because it's been beaten down so much. I don't think they're like, they posted good earnings for the quarter, but I don't think they're obviously like a revolutionary company at this point. I think they'll continue to grow how they were before. I don't think they're going to post like any amazing kind of growth rates like I think Farfetch will. I think Farfetch has a lot more growth left in it, and like I said, I do think it was trading rich, but I think the valuation right now is just crazy. I think 12.5 shares is just unrealistic. It IPO'd at like $27 a couple years ago, so buying it like half the price of the IPO and like 75-80% off of all-time highs, which were within the last year. So yeah, hopefully you guys learned something from this video. And like I said earlier, make sure to do your own research. Don't just trust what some guy on YouTube is saying. And yeah, go listen to their earnings reports, or go read their earnings reports, go listen to the conference calls, go read up on Jose Neves, I think is how you say it. I'm actually not sure. But anyways, thank you guys so much for watching if you made it to this point. If you could hit that like and subscribe, I would really appreciate it. And yeah, thanks again. See you next time. Have a good one.